How are we doing, property entrepreneurs? Hope you're good. Enjoying a nice weekend. Let's make sure we're coming through live. It's been quite the weekend waiting for these updates for these loans for Monday. Obviously, we had all the reports that things were coming through and that we were ready to go live with them all 9 o'clock Monday morning. But as of yet, there's obviously been no sort of formal published updates. Hey then, Tim, good to see you. So obviously, yeah, we've been keeping you posted through this. Was genuinely expecting by now that we'd know what the criteria are. So I'm just going to give you an update. So there has been an update, or at least some more information available in the last 60 minutes or so. And I've actually now completed our first bounce back loan application. So with regards to like, why is this taking so long? To give you some insight what's happening behind the scenes, obviously, the government have taken 6 weeks to decide they're going to launch Bounce Back, mainly because Sybil's became basically the plane that never took off. You know, it was up and live pretty quick, but it had such a slow uptake. The idea with Bounce Back is that it's going to overcome those challenges and not have that slow uptake, and it's going to get those headlines they've been trying to work towards. The reality, though, behind the scenes is obviously since the GFC, because finance, the banks have been hit, they've all been bailed out in the past. The regulation and compliance now for banking is really, really high, to the point where really high to promote sensible lending, and specifically to prevent irresponsible lending. And obviously doing immediate grants with, you know, next to no due diligence or qualification or affordability tests puts the bankers at risk. The government need the headlines, they need the funds out. And remember, you know, we've talked about this enough times now. There's so many reasons that all of this is happening. With this one specifically, there's a game to play with all of this. The thing to note with Bounce Back specifically is there's two reasons this money needs to come out the door. The first is the government need their headlines. They need their headlines to show that there's money going out for the businesses. So that actually needs to be money going out to sort of not even stimulate the economy yet. That'll be through the bounce back. That'll be through the blitz boom for the 12 months when we come out of this. They need the money out the door to help the businesses survive, to get the headlines, to make sure there is that liquidity. And then second is they need to get this flywheel of the economy going again. And the only way that people can spend money is if they've got money. And obviously if businesses become liquid and have capital, there's then an opportunity for them to start getting the supply chain moving again, buying stuff, investing, even just keeping these things going. So behind the scenes, the government want to get the money out the door, but the bankers now obviously are saying, you know, you're asking us to basically break every rule in the banking rule book. And this is the banking rule book. It's the Bank of England. It's the FCA. There's all this legislation and regulation to stop irresponsible lending. So there's a bit of over the weekend, there's been a huge roadblock, like catch-22, where the government want the banks to open the floodgates, which is what they've been trying to do with Sybil's, which has not been successful. And now they want to do it with 100% guarantee, try and make it more fluid. However, they don't want the banks now don't want to be on the hook. And it's even to the point in the financial space where if a senior banker or the CEO of a bank promotes or allows irresponsible lending, they're actually personally on the hook. So them, you know, financially themselves, legally themselves, you know, they could go to prison for breaking these regulations. Many of you would have seen the letter that Rishi wrote to the banks, to all of the approved lenders, to say we're going to retrospectively change the law. So we're going to retrospectively put a grant across, or, you know, change the legislation so you don't get caught out. So the things we're asking you to do, which is, you know, bypassing the normal due diligence process to speed it up and open the floodgates. He said, you know, we won't hold you responsible. We will write a new law to change the terms, to overwrite the acts that are in place, and then it will circumvent this. But you know, on the basis of a 2-page letter, the banks have now potentially got to put their head on the block. So behind the scenes, that's what's creating a lot of friction and slowing things down. Equally, the fact the government have taken 6 weeks to create a scheme, and now in 6 days, banks have got to put it in practice. And, you know, they're like, you know, they're up against it, but fair play, they're doing it. You know, they're pulling it off. In the last hour, Lloyds launched their online application form. So the online application's live, and through this process, the first port of call is always going to be your own banks, because if there are checks through this bounce back, the biggest ones will be likely be money laundering and fraud. You know, they're the sort of fundamental ones that are quite easy to sense check. However, that will delay the process. If you're with your existing bank, your account will have already been qualified for this, so it will automatically credit you for that. So with regards to eligibility, we haven't had any other transparency other than end of last year, the business had to be solvent. And I think that's pretty much it. And then obviously the 25% of your revenue, and you can't be already in receipt of any other Sybil's funding, basically. Although if it's less than 50 grand, you can port it across to bounce back before November 2020. So we've not seen a huge amount of insight. However, in the last 60 minutes, the first list of questions. So do you remember when I said to you about Sybil's? I said what will happen with Sybil's at the minute is that there's that first mover advantage. Every bank will have their own criteria. Then a framework will drop in. I think the government have got that transparency, that's what created one of the issues. So I think bounce back will be the same framework for each bank in the main. And Lloyds have just released their first online application. So I'm going to post the link in the comment to this. And even if you don't bank with Lloyds, what you can do is you can go through these questions and it'll give you a good idea of whether you're going to be eligible or not. I've just completed the first application, first one of our applications. And I did it in maybe 3 minutes. It's just yes, no questions, couple of fields to fill in. That's basically the first batch of questions. And what it will do is it'll get you to a page where it says, based on answering these questions, are you eligible? And it will say yes or no. One of the big things that's come out, I know we've been talking about this previously, is whether buy to hold companies are going to be covered. One of the first criteria that's been published on the Lloyds website is over 50% of your trading, or on the Lloyds application at least, over 50% of your trading has to be in services or trading. So if you're an investment company, you're a holding company, you're a lender, if you're in that space and you're not doing 50% or more in trading or services, then you won't in this capacity qualify based on the questions that are on the Lloyds application. I'll post the link in the comments. My suggestion would be have a run through the questions. And at this stage, it's just a bit of an exercise. So test what questions do you put in? Do you qualify? Test different businesses, and it'll give you a head start for tomorrow. And then at the end, if you are successful, it asks for your personal details, how much you want to borrow, and then it will say the 2 things you may need. So Lloyds is at the minute saying, thank you for your inquiry, somebody's going to call you. I don't think that's going to be the case. I think it will be a black and white yes or a black and white no, or you'll be waiting for that call for quite some time. There might be some first mover advantage like we were with Lloyds the first time round, and then potentially like we are with Lloyds now. You know, the application's literally been live less than an hour, so hopefully we're one of the first ones through. But it tells you the 2 documents they may ask for. I said this again last week in the battle briefing. I don't think you're going to need a business plan. I don't think you need anything lengthy. I'm going to go through the details of this tomorrow because it's an amazing opportunity. If you can genuinely qualify and do it, don't do anything fraudulent on your applications, because as I've said previously, the Sybil's the Corona Fraud Squad will be out the other side of this, going back and checking things, anyone who's abused the system once the dust settles. But go through it, test it, and if you can legitimately get the funds. And then in tomorrow's battle briefing, I'm going to be taking you through Financial Fortress. So what to do with these loans, what not to do with them, how to make sure you safeguard against the future. We need to be very strategic. There's new rules to the game and we don't even know what they are. And one of the things I've spotted already is I've read and I didn't get this off Lloyds actually, this was off of the Barclays website. So the Barclays website has also got the definition of, so we know that you had to be I can't remember the exact terminology they used, but basically a viable business or an actively trading business by the end of last year. So the business had to be in a stable position. The definition of that has now come out, and I'm reasonably well read and I understand quite a lot of this stuff. It is not straightforward. It refers to acts of incorporation. It refers to clauses of insolvency. There's going to be all this small print, and this is the blessing and the curse of self-certifying. Self-certifying means you decide whether you're good enough for the money. And then what happens in practice? If it all goes well, they get the money back, it's happy days. If the proverbial hits the fan and you've got to come from someone, it's like, right, well, you self-certified. See clause 3, section 4A of the B Insolvency Act, which you signed off in page 43 of the accompanying documents that none of you have ever read because you've self-certified. You've just clicked terms and conditions. These are the sort of things that we need to play into. And I'll go through all of this with you in detail. I'm literally just giving you 5-10 minutes now to say Lloyd's applications online. The first phase can be used by anyone. You don't have to be a Lloyd's account holder, but what it will do is it will show you by answering about 20 questions whether in black and white terms you're eligible. My expectation is that this is the centralised framework that all banks will use for the first phase of the application, and then you'll potentially go into some level of assessment. I'll share with you more details tomorrow when obviously there's more details published. My first loan's gone in. The response was that we'll call you based on what you've answered, you are eligible. For the first one, I applied for the highest application, so I applied for 25% of £50,000, which is the cap. Obviously, that if you're only turning over 200,000, then it would need to be less. But I've applied for the highest amount for the first, and I think we've got another. I think we've got another 4 or 5 going in either this afternoon if I do it or first thing tomorrow morning. So yeah, bit of update for you. The first round of questions are there. It's all a game, like first mover advantage, speed of implementation. I'll share the link with you now. Have a little run through it. The 2 documents you'll need is your income the 2 documents. For those of you that don't get through and it doesn't say you're eligible, the last page that says you are eligible and now you need to wait for somebody to call says there's 2 documents you're going to need. The first is up to 3 years, or if you've got 3 years trading accounts, 3 years trading accounts. Although I did see something very, very early on in this, that the business trading needed to be before the 1st of March. But then subsequently it says that it needs to be actively and solvently trading by the end of 2019. So there's a few criteria to play with there. Yeah, have a crack at it. I'll post a link, run through that. Don't do anything fraudulent. Make sure that the date through the first bit, it doesn't matter what you put. Play with it. It's not an application. It's just like an online test. Just play with that. It's open to anybody. If you do progress through to the application, then make sure there's nothing fraudulent in there, because you'll probably get it through now. You might get the money today, but I guarantee you there's going to be anyone who abuses these models. And I don't mean abuse it as in say you're going to use it for whatever, revenue replacement, and then you use it for investment. I mean fraudulently raising the funds. The reallocation of the funds in that capacity is very woolly at the moment. However, there will be framework that comes into that, and I'm going to share all of that with you in the Property Entrepreneur stuff tomorrow. So cool, give it a crack. I'll share the link. Have a go, see if you qualify. The 2 documents you need is accounts and then personal income and expenditure statement. So if you've got your personal cash flow management that we've all done together, use that. If you haven't got it, literally download it from the Facebook group, populate it for last month. Be very straightforward. If you don't know your turnover for the last 12 months, download your last few months bank statements and and do it by month, and it will show you total amount in and total amount out. That's a very, very high level personal and business P&L if you haven't got your P&Ls on zero yet and you're not releasing those statements. Anyway, there's loads of this to go over tomorrow morning. Just a quick update. I'll share the link with you in here. Yeah, best of luck. Let's see what it comes to.